Hi, this is Rowland for Money Markets TV. This week I'm focusing on Europe. The Eurozone economy is a mess, and it continues to unravel. Consider the events of just the past couple of weeks. Greece is once again on the verge of defaulting on its national debt. Standard & Poor's lowered its outlook on Italy's credit rating. In Spain, the ruling Socialist Party was pummeled in local elections, following a week of nationwide protests over the government's proposed austerity measures. Meanwhile, Fitch Ratings announced that its outlook on Belgium's credit is now negative, as an electoral deadlock leaves the nation in political limbo. Finally, Ireland and Portugal both need bailouts. But first, the European Union has to raise cash, which may not be so easy. I don't know how Europe will find a way out of this mess. Whatever happens, you can bet that many investors will try to take advantage with exchange-traded funds. But as I'll explain today, the European ETF map still has a few empty spots. After all, defining Europe is surprisingly hard. Are Russia and Turkey European or Asian, or both? Is Iceland really part of Europe despite the long swim? If so, why is Morocco not European too? It's just a quick hop across the Strait of Gibraltar. You may hear about the Eurozone, where the euro currency is used. That sounds comprehensive, but what about the UK, Switzerland, Sweden, and other countries that still cling to their own national currencies? Europe is further split into developed and emerging economies. The latter mainly consist of former Soviet satellite states, but also include other nations that are further west. These are some of the reasons you can't buy a total Europe ETF. No single benchmark includes all the financial markets that most people think of as Europe. The building blocks exist if you want to piece together a portfolio, but you can't get Europe in one trade. The same is true for the credit markets. There is no single European bond ETF. The best you can do is the PowerShares DB German Bund Futures ETN and its leveraged cousin, PowerShares DB 3X German Bund Futures ETN. Granted, now may not be a good time to jump into European fixed income, but it would be nice to have the option when the time comes. If you want to invest in specific industry sectors, you'll find another blind spot in European ETF offerings. Here's a complete list of Europe-focused sector funds: iShares MSCI Europe Financials and iShares FTSE EPRA Nareit Europe. That's it, 2 sector ETFs, one of which is so cryptically named you may not know it invests in real estate. And the volume on both of them is so low that they're dangerous to trade. Maybe I'm the only one who has noticed these gaps, but I'm pretty sure that's not the case. Instead, the people who invent new ETFs have simply chosen not to fill the gaps. Why? I think there's 2 answers. The first one is demand. Launching an ETF is expensive, so new ones usually come out when investors start clamoring for them. ETF sponsors keep close tabs on demand and will respond when they think it's worth the effort. The second answer is more complex. The international jumble of tax laws, trade policies, and currency restrictions sometimes makes it impractical to offer certain investment alternatives, no matter how much people want them. Resolving these thorny issues can take years. The good news is that you can still invest in Europe, or at least parts of it, through around 50 ETFs and ETNs. Whether you should invest in Europe right now is a different question. What we know for sure is the continent, however you want to define it, isn't going anywhere. As always, the key is to move in and out of the right ETFs at the right time. For Money Markets TV, I'm Ron Rowland. Thank you for watching.